Hello, my name is Michael Salmony, and I'd like to welcome you to another episode where we talk to the most interesting people around modern finance. And today I have Dave Birch, who I'm not going to introduce. Anybody who's been in any conference anywhere in the world for the last 20 years will have seen him on stage. He is always super entertaining and, of course, very knowledgeable. And this time he also had a very original thought, which I would like to hear more about from him. And that's the intersection of APIs and AI. Can you tell us a bit about that, Dave?
Yeah, sure. The genesis actually was a few years ago. I wrote a piece for Wired when I was looking at AI, and I'd been to a couple of events and I'd read a few things, and it was all about how banks will use AI. And I remember thinking at the time, this is sort of 2018, 2019, that doesn't seem complete to me because it's the customer use of AI which is more revolutionary. In other words, if banks use AI, they'll use it to, I don't know, reduce seats in the call center or make more accurate credit reports, or I mean, whatever. But that's just doing what they do now. But I started to think, well, what happens when customers get AI? How does that change the landscape? Anyway, I wrote this little piece about it. I put it to one side. It was published a few years ago, and I didn't really think about it. And I happened to be doing some work with one of the banks here, and in the middle of the sort of generative AI storm, and the thought came back again, and we worked on it a little bit. I ended up writing a paper for Journal of Digital Banking with Kirsty Rutter, who's head of strategic investment at Lloyd's. That paper sort of got some traction and led me to think, actually, there is a genuine threat to retail banking profit pools here, and the thinking goes like this. Let's say, for just as a sort of rule of thumb, about 2/3 of net profits for banks, about 2/3 are net interest income, and some proportion of that net interest income, let's say half of it, perhaps, is what you might call inertial. In other words, if I was really on top of my finances, if I logged in every day, I'm sure I could find money that's in my 0.9% account at one bank and move it to a 2% account at another bank, and then the day after I could log in. But of course I don't, because I'm a normal person. I've got other things to do. But of course, when it's bots that are doing it on my behalf, that ceases to be a restriction. And so that's kind of where that thinking went. And I started to think, well,
sorry, let me just stop you there. That means that sort of banks will have to pay out more interest. They won't be able to charge overdraft fees anymore because these bots will prevent the accounts going under. That's going to be a massive impact on their profit pools. Is that what you're saying?
I think it is, and I read some stuff last year from Matt Harris at Bain, who's someone I really do pay attention to in the sort of fintech space, and he was looking at the magnitude of the impact on it. I think I'd correctly discerned the direction, but it wasn't until I read his work on the magnitude of it I realised it would have to be central to bank strategies.
And
Now,
of course, the thing that will really accelerate this is that now these bots can access bank accounts, right, through APIs and TPPs and fintechs. They can
correct.
access your data and your transaction and initiate payments and do this all automatically, right?
Correct. And so then I started to think, well, okay, if I'm a bank and I need to compete with products in that landscape, if I'm only going to compete on price, then I'm doomed. I mean, that's a race to the bottom, obviously, and some people will win it, but a lot of people won't. So I started to think, well, okay, what do bots want? So then, because a bot doesn't care about your advert on television, the bot doesn't care that you sponsored the football or something. The bot doesn't care that you have a nice logo or about the location of your branches. I mean, bots don't care about any of this kind of thing. But what would bots care about? And that brought me back to the APIs again, because then I thought, I mean, tell me if this thinking is wrong, but my sort of logic was, well, what bots do care about would be the response time from the API and the service uptime and things like that. So if I'm a bank and I don't want to compete on just price, I need to start competing on APIs and taking APIs more
Or you could,
seriously as an element of competitive strategy.
or you could argue actually the inverse. A bank might be interested in having particularly bad APIs so these bots don't get access to your data.
Yes, well, I mean, they'd be chasing a vanishingly small pool of deposits then, because I think an awful lot of people, I mean, we all think we're average, don't we? But I think an awful lot of people must be like me, where, I really resent the fact I had to spend a whole weekend looking at different savings accounts. I mean, in the UK, we have these things called ISAs, individual savings accounts. And you go through this thing every year where you search all the different and you read the Sunday papers and you look at the tables online. And it takes 2 days of messing around to work out which one you want, and then to open it, because you've got to mess about with passports and driving licenses and good knows what else. The idea that bots could do that for me is extremely attractive.
So that's like a sort of moneysupermarket.com, a sort of
Yeah,
a comparison engine on steroids, basically, which
yeah.
is automated.
You could imagine a landscape of bots that are all in the UK. We have the FCA duty of care, so you could imagine different flavors of bots under the FCA duty of care, where people would choose bots that had more of a kind of ethical alignment. So, I could imagine the example that was used at the city event you're talking about was like, you could imagine a sort of Greta Thunberg bot, which would make greener choices. And there would be different. So people would choose bots that kind of aligned with their values, I think, in a way. That seems to me to be and it would
So
be
you
very.
can not only optimize your portfolio, your spending, you could also do it in line with your values, right? But you're
Yeah,
looking at it now.
you'd optimize the portfolio, but within an ethical envelope, if you see what I mean.
Exactly. Yeah.
Yeah.
But you're looking at it now from a consumer point of view. Isn't there at least as much potential also from the corporate, from the business point of view, that you can optimize your liquidity and all that, and
Yeah,
optimize
I've had a few
money market?
discussions with people in this space. So a lot of people who are beginning to play around in this space. My good friend Mike Kelly, who I think you know as well, made the Bank GPT bot. So he built the GPT plugin to the UK open banking interfaces so that ChatGPT could talk to his bank account. And I mean, I can't remember exactly. I think it took him the best part of a morning. Like, it wasn't that complicated. So people will be messing around and doing all sorts of experiments in this space. So it's sort of interesting to sort of speculate, okay, where might that actually turn into business? And I think it could actually be the SME space, which is the focus of that, because SMEs are notoriously poor users of financial services. If you look at the tradesman, the plumber, will fund his new tools on a credit card instead of getting an appropriate bank loan because basically he's got better things to do and can't be bothered to go to the bank and fill out all the forms, all that sort of thing. Well, of course, bots would be able to make a big difference in that space, like fairly early on.
I mean, another thing that you trigger with this Bank GPT, this mashup where somebody in sort of a morning managed to connect ChatGPT to his bank accounts. I mean, that also would mean you get better PFMs, right? At the moment, I get a PFM which tells me I spend 15.79% on insurance, which tells me absolutely nothing. But if I could ask it a sensible question, like what kind of mortgage could I afford? Can I afford to go to Paris on holiday? How much should I put back for retirement? Something that is really meaningful to a human being. And I would get a sensible answer based on the data on my account. I mean, that is super powerful.
The long-term planning, I think, is quite an interesting point, because for wealthy people such as you, having a sort of financial advisor is just natural. It's part of the warp and weft of life. But for most people, it's really not cost effective, unless you have some significant savings or investments. It's not worth. So this idea that you could see, AI bringing that kind of investment advice to the mass market, I don't think that's.
This is the topic of democratization of digital finance, which we see all over the place, to SMEs and to everything. But Dave, it's been fascinating talking to you. We could spend a lot more time on this, but our 10 minutes are up. Thank you very much for all those stimulating thoughts. Wish you much more success and seeing you at the next 20 conferences.
See you soon.
Anyway, thank you very much, Dave, and thanks to everybody who's watching this channel. I hope you found that as stimulating as I did, and please watch out for the other episodes here. Thank you very much for watching.